Malaysia's economy expanded by 4.5% in the first quarter of 2019, partly supported by a rebound in the agriculture sector due to the recovery in oil palm yields. Firm private consumption growth also helped. While first quarter GDP growth did beat economists' estimates of about 4.3 to 4.4%, it still lagged last year's pace of 5.3%. Overall, Governor Datuk Nur Samsia Muhammad Yunos says the central bank expects Malaysia's economy to grow between 4.3 and 4.8% for the year amid the backdrop of the US-China trade war and growing concerns on the outlook for the global economy. Bank Negara also announced several initiatives aimed at enhancing market efficiency, liquidity and accessibility in the bond as well as the forex markets. These include further increasing the availability of off-the-run bonds to be borrowed via repo for market-making activities. Asked if the announcement of these initiatives was in response to the news that Malaysian bonds could face exclusion from FTSE Russell's World Government Bond Index, Nur Samsia says it is a mere coincidence. Malaysia was placed on the FTSE Russell's watch list last month, and experts have warned that Malaysia could face an outflow risk of up to 33 billion ringgit should its bonds be dropped from the index. Property developer P Setia is expecting a delay of around 1 year for Phase 2 and 3 of the Battersea Power Station in London. CEO Datuk Korchap Jan says the two phases are now expected to be completed by 2021. However, Kor is expecting only some marginal impact, with the take-up rate for Phase 3 having declined to about 67% from 70% previously. He is optimistic of maintaining a 90% take-up rate for Phase 2. Battersea Power Station is being restored to accommodate the largest mixed-use project in central London. The project spans across 17 hectares of land with an estimated total GDV of £9 billion or 36.6 billion ringgit. Its biggest office tenant would be Apple, which in 2016 said it would be making the project its new London campus and relocating 1,400 employees from existing offices around the city. The tech giant had planned to move in and occupy approximately 500,000 square feet of space across 6 floors of the central boiler house in 2021. The joint venture is 40% owned by P Setia, 40% by Sime Darby Property and 20% by the EPF. Poultry producer Hub International had a firm start when it relaunched on Bursa's main market this morning as its shares opened 2 cents above its issue price of RM1.10 amidst market volatility. The stock hit a high of RM1.19 today before paring gains to close at RM1.10, giving Hub a market cap of RM4.02 billion. Hub International is the new name of the restructured Hub Holdings, a main board-listed company controlled by the Lau family that was delisted in April 2012 following a privatization exercise. It is one of the largest fully integrated producers of poultry, eggs and livestock feed in Southeast Asia and controls 2 listed companies, namely egg producer Teosan Capital and Indonesian poultry player Malindo Feedmill. Hub International's IPO of 937.5 million shares valued at 1.03 billion ringgit makes it the largest local listing since Lotte Chemical Titan Holding in 2017. It was oversubscribed by 3.64 times. The group has successfully raised 275 million ringgit from the public issue of 250 million new shares, mainly to support its business and operational facilities expansion in Malaysia, Vietnam and the Philippines, as well as for working capital. Pharmanyaga saw a 12% rise in first quarter net profit thanks to stronger demand from government and private hospitals in both Malaysia and Indonesia. Earnings stood at 19.6 million ringgit versus 17.6 million ringgit previously, as revenue increased by 27% to 786.1 million ringgit. During the quarter, its Indonesia division marked a turnaround, registering a profit before tax of 400,000 ringgit, an improvement compared with the deficit a year ago. This was mainly attributable to increased demand from its clients as well as ongoing cost optimization measures. The group declared a first interim dividend of 6 cents per share. Looking ahead, the pharmaceutical company says prospects remain bright as it continues to build on its concession and non-concession business. In particular, the group aims to heighten its market presence in the private sector via strategic marketing initiatives. It says research and development efforts remain a key driver as the group expands its product portfolio. The group is also focused on strengthening its Indonesian operations to tap into the market's potential. Putrajaya plans to use all the monies collected by Tabung Harapan Malaysia to repay a portion of 1MDB's 1.7 billion ringgit debt due this year. According to Finance Minister Lim Guan Eng, the fund had collected 202.7 million ringgit by the time it closed in January this year, including the investment income from a fixed deposit set up by the National Accounts Department in March. The fund's most recent balance comes up to 203.3 million ringgit. This decision was made by Tabung Harapan's Trust Account Committee during its meeting on April 24th. Lim says while the funds may not be able to repay 1MDB's entire debt of 51 billion ringgit, it will remain as a symbol of Malaysians' loyalty and patriotism when it comes to repaying the country's debt. Tabung Harapan was set up last May following the outcome of the 14th general elections to receive contributions from members of the public who wanted to help alleviate the country's debt.